Okay, so I am going to introduce Niall Haughey with Grays. He's an Agri Fintech thought leader. I think he gets the award for the furthest traveled because Niall is coming to us from the UK. He lives just outside of London. And as we've been doing work in the fintech space, we were able to connect with Niall several months ago, maybe a year ago, and have been able to learn from him learn from us from some of the things going on in Agri Fintech. But he's been a really good thought leader in the space. So we're really thrilled to bring him to the stage, and he can talk about down-to-earth fintech and some of the things that he's watching and tracking within the fintech space. So, Niall, welcome.
Excellent, thank you. Thanks. Agri Fintech. Thank you very much, Camille. Agri Fintech. I'm going to start with a promise, and that promise is that this won't be the buzzword bingo session. So apologies. But please stay with me, and if I get too carried away, just give me a thumbs down, or if you really like it, just give a thumbs up. So Agri Fintech, it's down-to-earth fintech. And for me, it's actually a personal journey and also a personal mission. I started out my career in financial services in London in the UK, and after a few years I just felt like I was shuffling numbers around to other people who shuffled numbers around to other people who shuffled numbers around. I don't know if you ever get that feeling. But after a while, and I worked on some fintech projects, I started to look at what was happening around the world. And I started to write a blog on emerging fintech in developing countries. And at that point, one thing kept coming up time and time again that I found absolutely fascinating. And it was the overlap of fintech, financial technology, and agriculture. And this, for me, was the promise of fintech. It was real-world people, and it was real-world problems, and they were getting solved using financial technology. It wasn't just numbers getting shuffled around, moving from one person to the next. And I really, really enjoyed that and liked that about it. So as I started to talk to people about Agri Fintech and how it could work in agriculture in the UK or around Europe, I got met with a lot of blank stares, surprisingly. And what I then went to do was start to speak to other people around the world, and that's what led me to actually working then in sub-Saharan Africa on some really cool projects, like building input finance using mobile money, working on a digitized grain warehouse receipt system, and also setting up a credit fund for climate-smart ag equipment in East Africa. And so, for example, in the grain warehouse receipt project, one day I would be in a warehouse in southern Africa, watching people grading grains and putting them into bags which were just, had holes, they had all sorts of things wrong with them. And then they would put it in a warehouse where there were holes in the roof. And this was the middle of rainy season. And then the very next day, I would sit in the boardroom of a bank, and I would be explaining to the credit committee or some of the board members about the benefits of having a digitized warehouse receipt. And they got it. They knew that if you could have that digital ticket, and there was regulation and rules around it, that you could trade it. But I didn't want to tell them about the warehouse that I had just seen, because that was not going to get past credit committee. We know that. So Agri Fintech. As I met with all of the blank stares, it was clear to me there was a gap. The agri people didn't really understand the fintech side of things, and the fintech people certainly didn't understand the agri side of things. And I took it on as a mission at that point, and that was to gather some data and also gather the stories about the projects that were happening globally, and give some of the entrepreneurs a voice, and also a place where some of that data could be gathered and also used by people who are interested in the sector. And that's where Grays and Agri Fintech started. And currently I have a newsletter that I cover this topic, and also recently done some reports on the sector. So in my presentation, that is, yep. I'll run through a few things. So I'll give an introduction to what Agri Fintech is. I'm conscious I haven't really defined what I'm talking about. And then I look at some categories within fintech itself, and I'll pick decentralized finance, I look at payments, I look at buy now, pay later, and I'll also look at embedded finance. And this is maybe where you could say this is the buzzword bingo or BS bingo that's coming up. But what I want to do is just look at some of these categories within fintech and explore if they can be useful to the agri sector, and if so, what could we do about it, and if not, why not, or where is the room for improvement? So what is Agri Fintech? First up, it's not just fintech for farmers. I often say in agri-tech, there's almost too much emphasis on agri. There's too much agri. There's a lot of emphasis on what happens on farm, but there is a huge amount of activity that happens pre-farm and post-farm gate. And actually, I think that's as important. These are a few different ecosystems that I look at within the agri space. So we've got grains, and Bushel are a good example of a product within that. You could also look at equipment, and Tractor Zoom are building an excellent ecosystem around them. And also, there are various ones that you will recognize here. But maybe my favorite is in the bottom right corner. For fibers, there's a company in India that is called Risha Mandi. And in your mind's eye, if you imagine what an Indian wedding looks like, it's an explosion of pinks, greens, yellow, all sorts of colors. Risha Mandi have digitized the silk trade across India, and they've aggregated some of the buyers, they've aggregated the sellers, and they provide the tools in the middle so that they can trade more efficiently and bring financial services into that ecosystem. There are three main things that are driving agri-fintech at the minute. And I could probably do a whole discussion on this, or a whole presentation. I think digitization, we all agree that that's happening within every ecosystem, not just food and agriculture, not just financial services. It happens everywhere. The second one is integration. And we've heard a lot about integrations that have happened between various systems. Within financial services, one of the major trends at the minute, or major pushes, is for open banking and open finance. And that's about creating the rules around how data is shared. And we've heard a lot about that, but that means financial services is actually changing quite a lot. And then finally, sustainability. Last week I spoke to a major global bank, and they're very interested in agri-fintech, and they summed it up perfectly. This was the best way for them to support their CPG clients globally. Because of the sustainability requirements, they needed to be finding out where the data is, and then how the financial products can start to reflect some of those sustainability requirements. So as I walk through and I discuss decentralized finance, or DeFi, payments, BNPL, and also embedded finance, I'm going to loosely use this structure. I'm going to describe some features, some facts, and then ask the question, what is the future? So decentralized finance. Who here has a crypto wallet? There's lots of hands going up, and that's great. Who here likes the prices in their crypto wallet at the minute? I don't see any hands, and that's fine. I think the least interesting thing about crypto is actually the price. And in DeFi, or decentralized finance, it peaked in November 2021 with $258 billion in total value locked, or TVL as it's called. But I think currently, if you were to look at that, the figure is about $45 billion. And that's roughly about the same size as Pinnacle Bank, who are a regional lender in the US. Or if you even look at John Deere Financial, they have, I think, a balance sheet of 38 billion. So it's actually not that far off of those type of organizations. And so what are the key features? First up is a digital asset. Secondly, tokens. And third, that they're smart. And I think for me, the thing that's most interesting is probably actually the digital asset piece. And that's why a lot of the protocols in crypto have actually gained a lot of success and also reached that $258 billion mark, because they're based on digital assets that can easily be traded and easily financed. If we look at some of the facts around it, I think this is probably better described as trends. Hybrid structures are more prevalent. Regulation is catching up. It is, and I think probably about time. And also to consider if a US central bank digital currency will be launched. And that's just basically a stable coin. I don't know if that makes any sense. Any thumbs up or thumbs down at that point? But it's basically putting the US dollar officially on some of the crypto rails. But back to this slide, the digital assets, tokens, and smart contracts. The amazing thing about a lot of the DeFi protocols has been how easy it has been to scale. As I've mentioned, they're highly liquid, highly tradable, and they're probably run by a team of about maybe 10 people. And that's because the technology infrastructure that is there is incredible. But the problem is, when you get to the real world and assets are not digital, then it creates complications. And most of us, I think all of us actually, not most of us, we live in the real world. Does anybody live in not the real world, maybe? No? So there are a few companies I want to discuss on how they tackle that real world problem. And the first is Goldfinch. They are not active in agriculture sector or Agri Fintech, but they're a useful touch point for how they deal with some of those problems. So their digital asset is just a loan agreement. They actually bring in investors from the crypto world, and they find investment projects in the real world. Their digital asset is just a loan agreement, and that's it. The collateral that backs up the digital asset, or the loan agreement in this case, is off-chain. And I find that interesting, and it also speaks to the hybrid nature of some of these projects. They have two types of tokens. The first token is their own token of Goldfinch, and then the second one, which again is, I think, something worth taking note of. It's the debt instrument that is highly tradable and highly liquid. And that debt instrument increases over time just because of the interest rate payments that it can collect. And it collects via smart contracts. So what is the future in ag? And it may look something like what Fresh Supply Company are building. They're a very, very early stage business. They're based in Australia, and they actually use MasterCard, one of the MasterCard blockchain solutions, and they originate transactions from within the food and agriculture sector, and they find crypto investors for those projects. So it's a very, very early stage, But I think it's always good to see these projects and find out what they're doing and how they are bridging that gap between crypto world and the real world. I think what it does, it really sets out what the future could look like. Could you imagine an ag bank that facilitates billions in finance, that has 10 people working in it? Can anyone imagine that? I could eventually, but I don't think we're there yet. And maybe one of the criticisms I would have, and probably a lot of people would suggest or maybe level at some of the blockchain projects, they're very solution focused, but not necessarily problem. And one of the problems is actually bridging that gap and getting to the real world. So for me, DeFi, or decentralized finance, it's excellent institutional infrastructure, but we need to get there. We need to bring the rest of the ecosystem with us. And the next thing I'm going to discuss is just payments. And I say just payments, but it's not really just payments. PwC recently came out and they said that the payments market in 2030 could be their opportunities worth $361 billion. And I find that incredible. But there's still a lot of problems to be solved. So we're standing here, or I'm standing here in Fargo, we're here, and the Great Northern Railway just runs over here. It's a few hundred yards away. And when that was built in 1906, that was part of the railroad boom, and that was the start of the US banking system of JP Morgan. And here's a question. Was the banking system back then, in the 1880s and early 1900s, was it more efficient than today or less efficient? And if you think it was more efficient, have we anybody that thinks it was more efficient back then? No. Do you think it was less efficient back then? And lots of heads nodding. Unfortunately, you're actually wrong. The costs of financial intermediation have actually gone up in the US banking system. Back then, it was 1.3% of assets, and today it is about 2.3% of assets. And that's after all of the technology investment into financial services. And when you think about that and the costs of doing business, there is still a lot of opportunity. And just to put that in an agri context, if you were planting corn today, what might be a respectable yield in bushels per acre? Does anyone want to shout? 180? Yeah, okay, that's pretty good. Back in the 1880s, it was 26.5. So that's roughly 5-6 times an improvement. And that's capturing all of the technology from the seed, the harvest, and post-harvest. So back to payments, because there's still plenty of opportunity. What does it look like? So within payments, I think the three main features are network, speed, and security. And the network piece is important because you can have users, but if they have nowhere to spend it, as we've seen with Farmer Jake, I'm not sure who that guy was, but you need to be able to spend that money. And I'm quite bullish actually on payments in food and ag. And two examples are Produce Pay and another company called Bushel. You may have heard of them. But Produce Pay are a really interesting example. They're based in California, and what they do, they've digitized the fresh produce trade in California, but also some of the cross-border trade between Mexico and California. And they looked at some of the basic, simple digitized processes. The invoices, the inventory, and then the payments, and manage the payments. And Produce Pay, they actually now they've provided finance to their customers of about $3 billion since they've set up in 2015, which is actually quite incredible. And I'll come back to that $3 billion in a few minutes. Bushel as well. I mean, I would have put this in here anyway, which is nobody will believe, but there you go. What they also have done in the grain sector is also quite exciting, because if you think again about those financial layers, the invoicing, the inventory, and then building a payments infrastructure on top of that, it creates the infrastructure for innovation that other people can then start to build upon. So what might people build? Buy now, pay later, or BNPL. Has anyone actually used BNPL before? There's a few hands going up. Anyone else? Okay, there's a couple here. Just to set the scene, one company in Europe raised 1.6 billion to further its BNPL operations in Europe in 2021. When I said at the start that I looked at data for Agri Fintech companies, in 2021, that was also the total in Agri Fintech that companies raised in that year across 180 companies. So you can see the scale that BNPL has, but I'm optimistic about Agri Fintech, by the way, but also then the opportunity that exists in Agri Fintech. And if you're not familiar with it, it's typically a pay in 4 structure. So if you buy something for $100, you pay 25 now, 25 and 25 and 25 in the next months. It's at checkout, and there's typically no interest. And then some of the facts. It's typically used by younger generations. The penetration is less than 10%, and I actually got that figure down to 5%. But 1/3 also made a late payment. And I put that in there because there is a debate as to whether it's a financial product or a commercial product. So what is happening in the sector, and could it work in Agri? Apple recently launched a buy now, pay later product. And it was amazing because all of the competitors in that space, they all came out, and it was pretty consistent. They all congratulated Apple and welcomed the competition and said it was good for the consumer. They didn't welcome the competition. Nobody, not on this planet, does anybody welcome competition from Apple, right? But if you can imagine the scale of going to anywhere and paying with Apple Pay and being given the option to pay in 4 installments. But I'm not sure, if you look at the agri sector, I'm not sure we can see a lot of people paying with their Apple Watch and paying for something. So maybe not that structure. But PayPal, they've also done something quite interesting, which gets a little bit closer to what I think it could look like. They increased the ticket size of transactions up to $30,000, I think it was. But they also increased the timeline that people could repay. So rather than 4 months, they increased it to 12. And that's getting a little bit closer to what I call BNPS, buy now, pay seasonally, which I think it may look like within the agri sector. And I've just put John Deere in here. I don't think they've launched a BNPL product, but someone correct me. But I want to think about who might be interested in that sector. John Deere Financial, they obviously have a huge business. It's about 38 billion balance sheet, and they also made 881 million in net profit that went to the shareholders, or to the balance sheet in 2021. But it might take someone like JDF to play around with that structure and make it relevant to the ag sector, because they know the industry and they've also got the balance sheet to work with it and create products. So BNPS, I think, is how it might work. pay seasonally. And the other interesting thing about BNPL is that a lot of the companies are set up to speak directly to the CMO, to the Chief Marketing Officer, and not necessarily the CFO, because it's more of a sales enablement tool. And why I think that's interesting is because that's products that have a financial element. They're starting to make their way out of the finance function and into other functions. And that's why I think embedded finance is actually quite an interesting space. This is also why I think it's an interesting space. 7 trillion. These numbers, by the way, keep going up, but I end here. Embedded finance is seamless. It brings a solution to the problem, and it's also ecosystem driven. Most of the time it happens and you're not aware that it has happened, or you are aware, you've made a conscious decision, but it's placing the solution at the right time for the right problem. Probably some of the best known examples are Shopify, who do e-commerce merchant solutions. They recently launched a capital business where, and I believe them when they say this, but they always say that they do not want to be in financial services, but because their customers can't get the right service, that they provide those services. And they recently launched a capital business to offer financial services. And similar to Produce Pay, who I previously discussed, they have also facilitated about $3 billion in finance over the last 4 or 5 years. So I think hats off to Produce Pay that actually they've done as much capital as someone as huge as Shopify. What's interesting about Shopify, one of their products offers people loans for their marketing. And can you imagine going to a bank and trying to quantify your return on investment for marketing and say, well, we want X amount on a loan to do this? Where Shopify can tell that 6 months after accessing capital, the merchant will have sales that are 36% higher than those who don't. So they already know this, and that's why they can offer those products to their merchants when they want them. And there are some really good examples of this creeping now into Agri Fintech. And Growers Edge, for example, they offer a warranty product to their retail customers, and it's based off a yield benchmark. And the yield benchmark, if a grower wants to exceed it, or if they go below it, then they will get a payout. And I think it works. I just hope the benchmark is not from the 1880s, that's all. The other example is Tractor Zoom. So they've also built an ecosystem, and Kyle is here, by the way. They've also built an ecosystem around equipment and buying and selling equipment. What's the first thing you do if you want to buy equipment? You find it, and then what's the second thing you do? You need to finance it. But they've done a really clever thing of bringing the pricing for some of the finance right into that buying and finding experience. And that's where I think you can see the solution is really starting to come in right beside the problem. And so I think I'm actually quite bullish on embedded finance within the Agri Fintech space. And it's also a good place for me to start to wrap up, because it's kind of come full circle at this point. I started out and I was talking about the real world people and the real world problems. And I think what we're starting to see in Agri Fintech are real world solutions that are coming in at the right time for the right people. Thank you. So please, Q&A, hit me with whatever questions you have.
Now, where did you get that good accent from?
I'm from out of town. Yeah, I'm obviously Irish. I think it's obvious. I'm not sure. Yeah.
So, as you think about, you were talking about pay, buy now, pay later.
Yeah.
Agriculture's had this in the industry for a long time. We call it prepays. Farmers will, and it's actually two different ways. You'd assume that they pay this side of the year and you get the product next year. That happens. Mm-hmm. So they pay now, collect it later, which is kind of interesting. Mostly, again, cash-based accounting problem we're solving for here. The other way around that happens sometimes is the commitment to it and the payment comes later. So we're already, our customers are kind of playing that financing role in those cases where that's happening. How can we, when we see other industries doing this, how can we make it better for our customer? How can we think about getting credit for the work that our customer is doing to help the farmer finance their operation by doing those kinds of things? What does FinTech say about what's possible for a business model there, or is there revenue to be made in the process for our customers?
Yeah, I think it's a really good question. And I think actually a lot of other industries are also trying to figure that out. I'm not sure there's a sort of a go-to model on that. But yeah, I think there's definitely ways of doing it. And that's why I was actually quite happy to see PayPal come out, even if it was just a BNPL product. There was 12 months and for higher amounts. But in terms of actually, giving that credit out, yeah, I think it's an interesting challenge that I'd like to see solved. Yeah.
You kind of touched on some examples that are more global than maybe a lot of us think in the US. As you think about that, I see ag compared to other industries a lot, but if you take ag specifically and compare it across the globe, where are we at compared to maybe some others? You talked about India, you talked about Australia earlier was mentioned. Well, I guess, where do you see us on that curve, and how fast do you see us going up that curve?
Yeah, no, that's a great question. I'll use sort of Latin America as an example. In the last 3 or 4 years, they've gone through a few things that have actually been very, very positive for Agri Fintech. The banks all went through a crisis, as they do in Latin America. The COVID hit, so the digitization theme had to happen quite quickly. But into that stepped a really interesting cohort of companies within the Agri Fintech space. And I think they're probably the most advanced in terms of having an ecosystem around Agri Fintech itself. And that ecosystem basically looks like, they have dedicated investors within that space. They've also got dedicated credit funds. I think one was announced last year of about $300 million or just over it. So that's not an insignificant amount. And they've also, even within their local, in Brazil, in their local fintech association, they have an Agri Fintech chapter to that. And it's just things like that make it easier for businesses to, I guess, touch base with what other people are doing and build upon some of their success stories. In the US, I think that's just about to start. And I think it's if I were to go back to the ecosystems that I put up at the start, some of those ecosystems are more advanced than others. And I think pretty soon we'll see, especially when we consider what's happening in financial services and fintech as it moves more towards B2B. Some of them will take the lead and start to become ecosystem orchestrators. And I think Bushel is probably a really good example of that because they're sitting within such a massive value chain that I'm not sure, I don't know what their plans are, but it's almost too big for someone to try and build the whole thing themselves. So I can see a lot of ecosystem players starting to come in around that and see how you could build specific products for specific use cases and maybe multiple financial providers or balance sheets coming in to work with those products as well. So I think it is a little bit early days, but it's definitely encouraging. And I think if you look at sustainability and open banking, open finance, those things are live, and it's in the post. It's coming. Hopefully not in the post like that check, but it's coming. Thanks.
You mentioned earlier in the presentation about how banks have become less efficient by a whole percentage point. What would you attribute that to? Is it like more hands in the honeypot trying to take margin, or are they just become less efficient, I guess? Yeah,
so that was, it was actually an academic paper. And one of the things they looked at, it was pretty consistent, the 1.3% cost. But in the 1970s, it started to drift up, and it started to drift up, and it just kept going up. And what it attributed to was a lot of the funky structuring that was happening within tradable financial instruments rather than the bread and butter banking sector. So because of those structured instruments, a lot of the investment was going into capital markets technology, and it wasn't necessarily filtering out. And that's why I think that technology investment still has to be made, especially in that B2B segment. It's still mostly yet to happen. If all of the brains that were working on securitization in the early 2000s now put their brain to building products in Agri Fintech, I mean, yeah, that would be a very, very interesting time. And a lot of those brains are, by the way. Yeah, thank you. Any more questions?